Welcome, I'm Catherine Magaña here with Rachel Ivanovich, Steve Wolff, and Vince Stefano, where we're here to provide you insights on the markets, tax planning, and financial planning. Here we are. Today is August 28th, 2025, and it's been quite an interesting week. Looking back over the last week, the markets are pretty much up. The Dow Jones year-to-date is at a little over 7%. The Nasdaq is up almost 12%, 11.8% as of yesterday's close, which was August 27th. And the S&P 500 is at about 10.2%. And the biggest movement over the last week is the Russell 2000, which is the small cap stocks. That's at 6.44. And that over the last week, we've seen about a 4% change in that index. So that's kind of interesting. But I'm okay if we stay where we are between now and the end of the year. I know Vince asked us a couple of weeks where we thought the markets would be, but I don't know.
I thought you took a bet on that.
Side bet.
$5. $5.
So here we are. Inflation's still at 2.7% as of July. And as we're looking at some of the short-term fixed income, I was looking at the 6-month and the 1-year CDs and treasuries. The 1-year has come down a little bit. So right now, 1-year CDs are at about 3.9%, and the 1-year treasuries at about 3.91. So we're starting to see a little bit a downturn. I think that's probably it's pricing in a rate cut potentially. On September 16th and 17th is the next Fed meeting, and there are still talks of a potential rate cut. There's a 88% probability of a rate cut that's coming up next month, so we'll see what happens there. Mortgage rates. So we, as of yesterday, August 27th, the mortgage rates are low or a little bit lower. So now the 30-year mortgage rate is at about 6.45, and the 15-year mortgage rate is about 5.61. So those have come down slightly over the last week or so.
A lot higher than they were when we were getting 2%.
I know, it's definitely. But I think this, we're interested to see if there's anybody that's been on the side waiting for rates to come down to buy a property. I think we're starting to see some of those rates come down a little bit.
Everything is relative to where it's been.
Yeah.
Because when I first started buying a house, which was back in the late 1970s and then another one in the 80s, I was paying almost 12% on a mortgage. So 6% would have been, they would have thought they just, exactly. Yeah. They hit the jackpot.
And 2% was even better, right? Yeah.
2% on that. We never thought we'd see that. I think I might have said this before in one of our podcasts, that I had a book. It was on real estate, basically on where the prices would be depending on what your interest rate was. And it went down to 8% at the time, and it went up to 16%. So no one thought that we would be getting 2 or 3% in a mortgage rate. So 6%, it's about average.
Yeah.
I think that you're going to see much lower mortgage rates. I think the Fed's going to push rates down, and I think you'll see the mortgage rates come down. And it needs to, because we've been in a housing quagmire for the last, 6 to 9 months?
What exactly is a quagmire?
Well, nothing. Well, you see all the listings around my neighborhood, and then nothing sells. They just take the listing signs down. So for me, that's a quagmire.
Well, so things have slowed down. I was just reading something by the Zacks Corporation, and they were saying that consumer spending grew at about a 1.4% annualized pace, which was better than the first quarter. This is in the second quarter, but still moderate. Business investment, which is more cyclical and a key swing factor, slowed sharply from 10.3% in the first quarter to just 1.9% in the second quarter. So what they're saying is investment in structures fell by double digits, and research and development posted its third straight decline. These are signs that businesses are pressing the pause button on long-term projects until there's more clarity on tariffs and trade policy. So that's kind of what Zacks is saying. Now, they're also saying that they want to be clear. They still think that the U.S. economy is resilient, and that's the bottom line. But we're definitely taking a much closer look at the underlying data, because things are slowing down. So at this point, there's no reason really to be extremely bearish or pessimistic about the economy, but certainly it's worth watching.
And I'm going to touch on what Catherine had mentioned about small cap stocks, because in our podcast last week, if you remember, we were talking a lot about small caps and how, they've been underperforming, on a comparative basis to the Nasdaq and the S&P 500. And then, I mentioned last week that they do well in low interest rate environments. So what happens on Friday in Jackson Hole? Fed Powell gives his speech, and he talks about a change in Fed strategy. Even though he didn't lower rates, just the thought, the market thought he may lower rates once or maybe multiple times. And I don't know what your numbers are looking like for multiple times, but we saw the market surge last Friday, and small cap stocks have continued to rally during this week relative to the Nasdaq and the S&P 500. And you got to remember, the market is a forecasting engine. And so it's going to continue to forecast that we may get rate cuts in the next 9 to 18 months. And if you think it's going to happen, maybe it's now time to start getting more invested into the small cap stocks. Many ways to get involved: ETFs, index funds. But what you have to remember is the Russell 2000 is heavily weighted to small energy and financials. So if you're a technology nerd, and
kind of like you are these days,
kind of like me, I like technology. I love technology, so I think it's great. But if you're a technology nerd, for example, you like quantum computing stocks, and you think that the future of computing is quantum computing. Well, what you may want to do is, buy a basket of these quantum computing stocks and ladder them with some larger cap names. That way you give your portfolio a hedge, and that because the quantum computing stocks in the Russell 2000 are not going to have the same performance impact on your portfolio, both in an upward and a downward move. So you got to be careful about that. But
and I would give maybe a steak dinner and a drink to a person who can explain to the average layperson what quantum computing is on top of cryptocurrency stuff.
The only thing I know about quantum computing is they use quantum mechanics to solve impossible problems that traditional computers can't do. That's the only thing I know. But I can tell you that the chairman of, and I forget, Huang, the chairman of NVIDIA Corp, is really high on quantum computing stocks and thinks that's going to be the wave of the future. But again, the reason I'm saying this is because not only can these stocks give your portfolio a huge boost because of what can happen fundamentally, but you have to remember, when interest rates come down, borrowing costs for small cap stocks come down, and merger and acquisition activity increases because of that. So you get another big appreciation impact on your small cap stock. So
also, when interest rates go down, the government's debt servicing goes down,
Absolutely.
Which is one of the big reasons why Trump has been railing about having interest rates go down. Now, whether they should because of the economy or not, it's a different story, but that's why he's railing about it.
So I'm going to continue to say one more thing. Finally, a word of caution. September, typically not traditionally a positive month. And we mentioned before that typically mutual funds are, taking they're doing their, capital gains losses and passing that on to the investor. So again, if you see the market come down a little bit in September, don't get nervous. I think it's a great buying opportunity. And, again, take advantage of any kind of dips and find these fundamentally strong companies.
It's interesting. I was looking at the year-to-date sectors that have been performing well, and this is as of August 22nd, so as of last week. The consumer staples is up over 20%, and the communications sector is up over 16.8%, and industrials at 16.2%. So it's interesting. There are some different sectors that are benefiting a little bit more. And then technology, which I thought would be a little higher, but the sector is actually up 13.7%. So it's, even though we always talk about the tech stocks, there's different sectors that are performing well.
So here's something that really doesn't have much to do with the stock market, but it has everything to do with technology. There are parents who are paying up to $50,000 for new genetic testing services that include promises to screen embryos for IQ.
Interesting.
Professional matchmakers are setting up tech execs with brilliant partners, partly to get brilliant offspring. Tech futurists are urging the intellectually gifted to multiply. So what do you guys think about that? It's not science fiction anymore because of AI and genetics and all that. We can do designer babies. What do you guys think about that?
I don't know. I remember a song from the 60s. What was that in the year
25.
You can pick your kid from a test tube or something. Well, I guess it's really
Would you like
starting to
would
get
you like me to sing that?
Yeah, absolutely. Go ahead.
In the year
Zanger.
25, da 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 da. Yeah, that's how it went. But if you're talking while I'm singing, they can't hear my beautiful voice.
That's true. Yeah. But anyway, that's interesting. How that was.
So
back in the
now
60s.
there are, of course, bioethicists, if that's the right word, are saying should we be doing this because there is always unintended consequences of whatever we do.
I said we don't know the impact just yet, and you may think it's a good idea, but I don't know.
Right. I mean, it's one thing to say that you want your kids to have blue eyes or, whatever, long dark hair or whatever it is. It's quite another thing to say, I want to make a race of super intelligent beings that, other than doing it naturally. And no comments?
I was just going to say, you know what else happens in September? Tax returns are due.
No, estimated taxes.
No,
Right?
corporate tax extensions are due. So is that maybe why the stock market? I mean, I don't know.
I don't know.
But corporate returns are due in 18 days. So if you haven't filed, get your and yes, estimated taxes
Yes,
are
I'll say those are due
also
too.
due.
Yes.
Now, what percentage of people do you think do estimated taxes? Because most people think, okay, it's April 15th, I'm done for the year.
Anyone with investment income, anyone with a small business. So,
You
mean in the United States?
Well, just percentage.
Of my tax practice, 80%.
Really? 80% of the people still are doing estimated taxes.
Yeah, I mean, it's either you pay in through withholding, because it is a pay-as-you-go system. So you pay in through withholding, or you pay quarterly estimates.
I thought it was a pay-through-the-nose system.
Definitely that. But anyway, so quarterlies are due. And you were talking earlier, we're having an interesting conversation right as we were recording our podcast about Roth conversions, and maybe when it's not a good time.
Yes, I
to
know
do
we
Roth
focus a lot
conversions.
on you should do, potentially, does
Pushing
it make
those,
sense, or
but-
is this something you should do? And yes, absolutely look at the tax rates and see, but there are instances where maybe
Who is your benefit? You really need to look to see who is your beneficiary, because there are some people that leave their IRA to a nonprofit. And why do a conversion and pay the taxes on it if you're going to give it to a nonprofit organization? So just keep that in mind, because it's not always the right time to do a Roth conversion or the right thing for you.
Correct. And then recently, I know you've been talking with one of our clients about. We looked at the beneficiary designations, and with the real estate having potentially step up in basis later, they reevaluated their beneficiaries on their IRAs because they did have some charities that they wanted to give. And originally they were going to give it, I think, amongst everything, and then realized, here's another way of doing it.
Exactly. So, for instance, they would then now, instead of giving their children part of the IRA and part of the house, they said, okay, well, the real estate, which gets the step up in basis, will go to the children. They don't have to pay the taxes. And the IRAs can go to the nonprofit organization because they don't have to pay taxes. So it was really smart tax planning, I thought, and financial planning.
Although if it's a big IRA, maybe the kids would get all bummed out if they don't get the proceeds.
I think it was kind of equal between the real estate, the fair market value, and what the value of the IRA was. So it made sense, instead of splitting things 50-50, to do it that way.
And then the step up goes really also based on the titling too, making sure how
Correct.
where's it
So
coming
make
from.
sure you check in with us.
Right. Or you can fix it, so that do the mathematics on it, so that it comes out even.
Correct.
You know what I'm saying?
Yeah. So if the real estate is lesser in value, you could not give the entire IRA to the nonprofit organization. But
There's always ways to work it out.
right. But talk to us.
You got to
We wanna
get
talk to
greedy
you.
kids. They want it all.
Maybe not. I don't know.
Yeah, tell them to work themselves.
That's right.
So I know Steve mentioned his beautiful voice, but we actually have the
No, that's the big, beautiful voice.
the big beautiful voice. What I want to share is we just wrapped up this week our One Big Beautiful Bill Act webinar.
Did you want me to sing that too?
Yes, you can sing a song for that.
I got your song there too.
So we do have that replay that will be provided on our newsletter as well as on our website. So definitely, if you have any questions or if you have a chance to review that, we're happy to have that.
And they can find that on our website. How?
You can go to
Going where?
www.wwmfinancial.com, But we'll send out in our newsletter. We'll email that out as well.
All right. So
Do you have your fear and greed index by
That's
now?
I was wondering about
Oh,
that.
where are we at?
I took last week off and forgot all about it.
Oh, yeah, that's okay. Well, yeah.
So I'll have it
Oh,
next
next
week. My guess is that we probably haven't changed
I was
much.
gonna say,
It's
probably,
been-
yeah,
Everyone's
yeah.
been pretty complacent, which in some ways is a little bit scary because usually complacency is followed by a lot of volatility. And as you said, September is the one month of the year where actually the market has been down more often than it's been up. Every other month has been the opposite, some better than others.
I wonder if it's everyone's going away for Labor Day weekend and.
Well, that could be. Well, and the last thing I'm just going to say is Q2 earnings season is almost over.
Yeah.
I don't think there's more than one or two big name tech.
I was like, we just had a big name.
We had a big
this
name
report, a
yesterday,
mixed
yeah,
bag, but-
and that was the last of the big market moving stocks. You've got a few software names that may report the first or second week of September. They may have some impact on the software sector, but other than that, it's pretty much done. So,
Yeah, and you talk about rates going down. If people are wanting to buy things like bonds or CDs or things like that for whatever the reason is, and you have time, you probably want to think about going out just a little bit longer term in maturity. Because otherwise, if they do go down, you're going to be getting lower rates, let's say 6 months from now than now. At least that's what things are predicting. So I might consider going 1 or 2 years out. If that is what you are wanting to invest in, you might consider that. Now, obviously, if you have needs immediately, you don't do that. But for those people that want their money in fixed income, you might consider a little bit longer maturity.
Yeah, especially because after September, the expectation is potentially we could see additional cuts between now
So
and
we'll
the end of the
see.
year.
We'll see. Anyway, that's what happened this week. We'll be back again, I hope, next week.
Yes.
Until then, you guys have a great week in the market and everywhere else. Talk to you then.
talk to you.
Thank you.
Please stay tuned for important disclosures. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. WWM Financial is a registered investment advisor with the SEC.